most interesting panels we have. It goes about money, investment, VCs, and tokenized investment into startups and the ecosystem. The question would be, first of all, welcome. Thank you so much for supporting. The idea of tokenization of assets when it goes to equity of the companies, that is becoming more and more trendy. And what we wanted to explore today, as per that a lot of startups are asking us, 1 second, sorry for that. A lot of startups asking for us that how the VCs, how the investors, how the economy is seeing fractional ownership of the companies, tokenized investments or VC funds. And I wanted to explore it. As I mentioned before, I'm not a good moderator and I can just initiate something, I leave it. I had a lot of panels with Oliver, and I'm sure that with your help, we're going to do it with a positive response. The idea would be that to understand what you guys think about tokenized investment into the industry, that's first. And then I want to explore more what you think of private IPOs that we can, like the companies can actually initiate their own private IPOs within their ecosystem. And welcome, I pass it to Oliver to start with.
Hi everyone, this is Agresh. I'm the head of partnership at Innovation City. We are government of Ras Al Khaimah Web3 free zone. So in the current scenario, the token economy has changed. Earlier, it was speculative, crypto trading, spot trading, and just about launching of token. It has moved towards a token compliance infrastructure. Investors have started looking out for startups who are building real product, which is a stronger product, which demands a real liquidity, has a stronger compliance and legal tech foundation. They also invest into a stronger founder who have a prior experience working in a similar kind of asset class. They also are looking for teams who have executed such kind of complex product. So the new set of token economy is all about trust, and trust can be built with right kind of infrastructure partners such as compliance and banking.
Hey guys, thank you for having me. Gaurav, CEO of TD Group. We operate a group of companies that are committed to the life cycle of a tokenized startup. From early stage of planning to post-launch token management and treasury. We've been one of the early hedge funds in the space, as well as investing since 2016 in early stage crypto projects. So with that lens in place, the current state of tokenization, I think, is going through two concepts. You can probably part them in one of that. Both of them have their own pros and cons, let's put it that way. So one is proper tokenization of physical assets, just simply to facilitate their legal ownership. And that part, I don't think has really caught attention because of the government limitations. UAE is a really good place where they have facilitated the legal binding of a virtual asset, like of a real asset to a virtual token. So here it's enforced by the law. But for a lot of places and for a lot of RWA around the world, the second perception, which is they take an SPV, they roll up a whole bunch of assets into that SPV, and they're tokenizing the cap table of that SPV, which is actually not enforced by the government, So basically, if this is not legally enforced, people obviously have bad experiences, and so this hasn't taken off. What am I implying through these two cases is in both of the cases, the ultimate problem still remains, which is the liquidity, right? If the virtue of tokenization of a real world asset is to introduce free movement of the asset, and to facilitate sales and buying, there is still an innate demand of liquidity which is still missing. So I've personally given it a title, and that is, no matter how virtual the real world assets look, they will still move at the speed of the liquidity which is reciprocated from the real world. So they will still move at the same pace. You should not expect to tokenize the block and that it will probably sell faster than it would sell as a real world, real registry, right? And that expectation, I think, is the real problem right now.
Hello everyone, thank you very much for giving the opportunity to speak today. So coming to the first question was about startups asking VC in which stage they would like to invest, or what are the credentials for this. To break this down in simple steps, I would say it depends in which stage the startup is. So in some startups, what we see, they have very senior team, yeah. So their credibility is principal, their reputation, what they bring. Because I think the time where investors just investing in visions, what we had, for example, 21, we all remember, they had no really business case, but they had kind of vision. So at this point, the token was more important as the business idea, or the cash flow, or the let's say the revenue which gets generated out of it, and based on this, of course, also a kind of utility. How can I use it? So I think if you have a very experienced senior team and you start to set up a startup in this area, I think this is definitely something in what I would look in to get especially credibility to the vision. And in the best case, we investing like Anglo-Saxons, let's say, I always want to see a user case to who I sell, what is the product. You have already customers, you don't have customers. So about tokenization, I think Gaurav, you hit the point very much. I just would like to add maybe one more vertical to this, and this is about assets which been so far eligible. So it means tokenization of assets which principle were in the past not really eligible, means they could not be refinanced. So, and I think this is something where tokenization makes a lot of sense, yeah? In the stage of to get investments maybe in new economy, let's name it new economy, yeah? But principle in all kind of economies which are underfinanced by classical products.
Thank you so much, everyone. Just as an example that you hit it, that the block going tokenized, you know, every startup or everyone we see, just to inform you that we are looking at that to bring the block as a tokenized equity to the market. I see a lot of challenges. The first challenge I face is the valuation of the company, which one that the government would actually accept to issue the tokens. And that one is a big challenge. We started it a few weeks ago with Vara. We negotiated how to do it. It's going to be a pilot regime that TheBlock would be one of the first ones to approach it. But my major problem is they want a valuation that is on the market value. Market value on the traditional market, it would be what it has happened now. It's only 1.5 years old. That's why our real market value would not represent the future. It means I need one of the top 4 to evaluate the future of the company, and that one is very difficult and very costly. I see a lot of, stoppages or issues to pass to reach that momentum. Back in Europe has been easier for us, but especially at this moment in the UAE, we are facing those challenges, and I hope regulators, as you guys, that can support those or support the accountancy of the valuation. Now, one of the questions would be, you know the VCs, you know how Oliver, you guys are a VC. Would you, because everybody want to go public, to go to your users or community, and everybody thinks it's going to be a huge growth to have 10,000 investors in 3 days, something like that. That is, as you mentioned, is not the reality. But would VCs join such a companies? I mean, if you tokenize, are you blocking the VCs to join? They wouldn't like to come in something that is publicly pushed, or is it too early for it, or would you do it before, get VCs first, then tokenize it? Can you just comment on that a bit? I pass it to you first, Gaurav, to start.
Thank you. I would again go back to the same narrative and take you back to the non-tokenized world for a bit. So think about it. You were to decentralize or distribute the equity of this place, right? I don't know what's the legal limit of having partners in a UAE company, but let's say if you were in BVI, right? If you were a BVI entity, you could have a maximum of 20 directors, like 19 directors, okay? And check my facts, probably wrong. Take it as as a sample set, right? So if you were to find 19 partners of this block, I mean for the block, that would have a portion of your equity, what would you do? You would go out in the market, find partners that would be interested in a business like this, create a value proposition that they would like to participate. This value proposition could be fixed income. Somebody would like to have a portion of the rent. This value proposition could be the appreciation of the real estate, which is the asset valuation, and so on and so forth. And I'm not talking rocket science. This is basically ABC of investing, right? Tokenization will not change this by even a fraction. Now, if you were looking at if you were looking for a tokenization to be a better facilitator of, let's say you said VCs, I'll use an easier term, investors. And I'm also assuming that you would say investors of a broader region, let's say not local to your network, but you would want like a larger network of investors to participate. That's not a tokenization problem, that's a marketplace problem, right? And then you get to a marketplace. So that, give me 1 minute to explain how the marketplace looks like. The RWA marketplace right now is primarily yield based. It's a fixed income yield marketplace. So there you don't have the same value proposition as you had in my example one of equity. There you're competing against the best yielding products. There are tokenized hotels in, I don't know, High Street London that have 8% annual yield, right? Probably no asset appreciation, and they're doing really, really well. And if a token or a RWA token of this hotel comes on the market, it immediately gets sold, right? Are you competitive enough in that marketplace? Think about it yourself. And this is like really how this place pans out. So I absolutely discourage everybody who thinks fails on either of these two strategies. And in that case, you should remain as you are. Don't spend a penny on tokenization because it's freaking expensive. No matter where you do, as long as you're doing proper tokenization of your real world asset, it will cost you money of standardization, of basic technology management, and of regulation. While finding 19 partners or 5 partners is not at all expensive, don't tokenize.
Thank you, Gaurav, for giving such a lovely insight. I agree with a fundamental rule book of investment and a right kind of product. First of all, at a government level, we ourselves doing a lot of POCs. When I talk about POCs, we are bringing our licensing on chain, which will be announced in 2 weeks. These are real owners who are real stakeholders in our free zone. These would be on chain on a certain kind of blockchain, which will give them a soul-bound, verified license, not just a paper license. This will give them access to an upcoming casino in Ras Al Khaimah. This will also give them a lot of value-add services such as discounts in hotels inside the Marjan Island. And when we talk about tokenization, we at Ras Al Khaimah, we are about to launch our own leaner version of tokenization framework, which will be independent of what we have in the UAE at present. We intend to bring a right kind of player who understands compliance as a foundation, who understands this as a regular product, not just instrument to create a cash flow. We want to bring serious team who will be building a right set of technology, because at the moment onboarding a new set of user with a wallet connect or through a regular channel of decentralized way is very difficult. The new Gen Z generation or the older generation should have a easier onboarding experience. We want to work with a team who would be interested in making an innovation in the UI UX level, and team who has a right kind of a product market fit. It's not just they want to tokenize, they need to have a stronger revenue model in terms of subscription fees, in terms of management fees. They should be collaborating with regulated custodian such as Farbod, maybe Xtrust or others who are operating in the country. We want every single user who is participating in tokenization should be KYC, either by Samsung or maybe any other operator who is available in the market. So, in a nutshell, the token hype kind of projects are moving to a trusted tokenization model. Trust is the key factor. If you are unable to build a trust, you will not be able to sustain this business in the long run.
Thank you. I would say from an investor point of view, nothing has been changed. Of course, I'm coming from a fully regulated world. I always would go to a legal, financial due diligence, a regulatory due diligence, just to check up everything. But what I want to add here, it's from a startup side, I think it's more important not getting this 10,000 maybe investors. It's more important, in my opinion, looking for long-term partnerships, which are able to give you access to markets and to know-how to extend your business, not only finance the business. Dumb capital is easy to get, smart capital a bit more difficult, but really for a startup with smart people and a good vision and business idea, you need like capital which really helps you grow, and also the investor should bring a kind of additional value, network, all those kind of things. That's the reason why I think, for example, TheBlock is a very good thing, because TheBlock gives principally startups and company access to different kind of ecosystems which you most likely would not have in a first step, and you would have to work on this by yourself. I also see from the investor side, we are not so much value driven anymore as we've been before. The reason why is because value is principally money on the paper, cash flow is money on your bank account. Nowadays, investors, they want to see projects which are principally, let's say, money generating, whatever this means at the end of the day. If it's revenue, don't have to be profitable, but at least following the budget and as well like the business plan, what they had original. And I mean, we all make this experience that you invest in a startup and at the end of the day, you don't find them anymore for some reasons. So, and the third point for me is, I would like to add here to Gaurav something. I think we have the marketplaces, the tokenization, but what getting more and more important in the future will be the distribution. So we have seen this already in the ICO time. This gentleman before us from Finland, he told about first ICOs 2018, 17. So why they have been failed? They have been failed because of less distribution to the ICOs on the markets. I think, meanwhile, the ecosystem in Web3 or crypto is such well developed that there are enough marketplaces. What is missing is principally the distribution side to institutional investors. That's the key. Whatever project you are doing, you can have the nicest tokens, whatever. You need a distribution to real investors, to like a real ecosystem, and not just fancy people driving Lamborghinis. And then you can pick up the Lamborghini at the airport or something like this. So I think that's something very important for the future, how to distribute the tokens to institutional investors who are really able to invest in your token. So we have, as I said, ICO, IPOs, whatever. As I said, I come from the real world, I said, so I think that's a very important part for the future.
Thank you, everyone. what I hear a lot, the startups that are approaching us in the last 1-2 months, not only here, globally, that there is a big issue that they think that because of the economy globally and because of what happened in the region that we are all aware of, they think that the investors are not really easy as before. They say they are considering a lot of facts, they have slowed down, or tokenized, non-tokenized in any aspect, that they feel a little bit disappointed that the investors are not looking anymore to invest and scale in a faster pace that they were. Do you feel the same, or how you see the ecosystem going on with the investment in startups specifically? Because SMEs, as Oliver mentioned, they make sense. They are looking, it should be in money, it should be cash flow there, it should be positive EBITDAs. That one, it's a total different ballgame. But the startups that they have approached us, they feel quite disappointed with this matter in the last 2 months. Whether it was the communication that was not there, or whether it is for any other reasons, do you feel that the market has changed, or is it the same, you're just lower?
The disappointment is reciprocated on both sides.
Yeah, I would say the same. So, I think, I mean, you have to see always where you raise funds. In my opinion, Dubai never was really a place of raising funds. It's more like a platform place, consulting place. If you want to go and raise funds, you principally go to Abu Dhabi. So this is how I see it. Of course, the investor appetite has been changed, also because of both sides. They invested a lot of money in startups and lost as well a lot of money in startups. But still, I think if you, as I said at the beginning, if you come with a good business idea, with a good approach, with a senior team which have credibility, which have track record, provable, yeah, and all these kind of things, then are still, in my opinion, it's able to raise funds. It might be a bit more difficult, and you will have to answer more questions. But principally, I still think and the funny thing is, investors, especially in GCC, they're sitting on enough money. They're having the issues that they're not getting the right projects. Yeah, and similar we face in the US. Europe is a bit a different market. So I think don't give up, continue moving forward, just think more from an investor perspective.
UAE has, US has clearly identified two kinds of investors. One are early stage high risk investors. They understand their game, they understand their mode, and they know who to talk to and how to assess them. And they have their own community, and they're available where they're supposed to be. So Y Combinator, Consensus, not Consensus, the older Consensus. Each one of them demo days, they have their VC list, they appear where they have to be, Drapers, everybody's like well set, established ecosystem. And then there are later stage VCs, something to clap about. See, it's just you guys who don't understand, they do, they're clapping. So, in UAE in particular, yes, a lot of capital moved, but that community structure of bringing these categoric investors to one place and exposing them to the right startups probably never, took off. And so, yes, these guys live here, but they still source their deals from their native old channels, right? So you really can't blame UAE for any of this, for this missing capital or this missing appetite and whatnot. So that's for one, right? It's not that UAE is missing out on capital, it's that the venues are still not established and open. You still have to network yourself through to their homes and private villas and whatnot. Now, how does this play a role in the current state? All those early stage VCs of crypto in particular were funded by people who made money in crypto, and so the mindset was super short term. If you're not giving me open tokens or unvested tokens on the launch day on the TGE, I wouldn't invest, and so on and so forth. And that culture sort of found its root with that mentality. What they missed in all of this is real revenues, real value propositions, real businesses, real users, right? And so we thought we were creating a huge multi-trillion-dollar meme market or shitty project market or shitcoin market. Then it was bound to collapse sooner than later. It's not that we produced only bad projects, there are really good projects. And so that kind of projects who still stick to the early stage fundamentals of startups, they still get money, they still get capital, they still get everything they need, if not from here, then somewhere else. Because let's not forget, I've been a VC for 17 years. I am always competing with other VCs like every other business. I might miss a bad deal and that will be a real loss to my business. So it's not your job to find the best VCs, it's your job to build a great project, and the VCs will come finding you. So that has been missing big time. Great projects are still getting funded. Yes, the overall appetite has gone down because the odds of these, super early stage VCs also has gone down. They've all lost money, right? Yeah, I think that's pretty much it.
Thank you, Gaurav. I agree a lot with Oliver and Gaurav. Firstly, the market has evolved. The founders have still been using the same playbook of 2021, 2022. Market has evolved in 2026. Their token design or the tokenomics is not at par with the current requirement of the VC. VC wants to understand, will your product be used by institution? Founders have no answer. Do you have any kind of a real community? Founders have no answer. Founders are thinking first they're going to invest a lot of money, accumulate a team, build a product, and then they're going to think about building a community and a distribution. Now distribution is a moat because any product in the end needs a distribution, a proper revenue model. A lot of founders, they just jump in building because tokenization is at the hype, stablecoin is at the hype. But gone are those days where VC is just chasing the token price. VC is looking for a revenue-driven model. VC is looking for a stronger ROI. Like Gaurav mentioned, a lot of the strongest products are still getting strong attention. They have got pre-seed round, seed round. Previous stronger products have got follow-up funding and so on and so forth. But at this point of time, when a startup goes in front of a VC, they see few fundamental elements. Do you have a right kind of a product fit? Do you have compliance at your foundation level? And a lot of founders have no clue. They are either just a technical founder or just second founder is just a marketing guy. So they do not pay enough attention to compliance, custody, and institutional usage. Without this, in 2026, it becomes impossible to raise real money.
Thank you so much. Okay. It seems the time is over. I want to really thank you for your support. Thank you for joining us as a speaker. Everybody, the names, everything is on the website. If you want to get in contact with Oliver, Gaurav, or all the team, let us know. And once more, thank you. Thank you for joining.